Twitter gets trashed, Snapchat lets you send boobs and money, and the race to bring the sexiest wallet to ESPN. This is the week of November 19th, 2014. I'm Stephen Chun, and this is Money and Tech. Social media giant Twitter launched back in 2006 and inspired the 32-character question, how are you going to make money? 8 years later, anyone still holding their breath should probably be checked on. Last week, Twitter held what they were calling an Analyst Day, where higher-up members of the company gave presentations on new strategies and new features in an attempt to impress Wall Street investors into doing what they're best at, investing. Twitter's CFO Anthony Noto, who emceed most of the all-day event, shared their new mission statement: reach the largest daily audience in the world by connecting everyone to the world via our information sharing and distribution platform products, and be one of the top revenue-generating internet companies in the world. First off, that statement is 83 characters too long, contains numerous grammatical errors, and they say world 3 times. Seriously, guys, you obviously weren't concerned with brevity here. You couldn't just throw in the planet or something? Anyway, after a day of Twitter throwing around buzzwords and enough pie charts to give a math teacher a seizure, their stock rose, which lasted less than 24 hours as the next day credit rating agency Standard & Poor's gave the social media platform a BB- rating, 3 notches below investment grade, and labeled the company's debt as trash, claiming the company is still years away from issuing the results investors want to see, and that they would raise the rating if Twitter broadens its revenue sources through international expansion and new product launches, maintains its market position, continues to improve its profitability, and achieves positive and sustained discretionary cash flow in the excess of $100 million in 2016. They also assess Twitter's business risk profile as fair, acknowledging the company's high potential for growth over the next several years and its competitive position in social networking. Twitter's stock immediately fell and has been falling all week. So this brings us back to the big question, why can't Twitter make money? The answer is, well, no one is really sure. There's been arguments that the company's struggle to define its vision or expand beyond its initial platform has hampered it. But the platform still boasts over 500 million monthly users. About 270 million of them are actually registered. But still, the company's first quarter earnings this year were reported to be about $250 million. So far, the only means of revenue Twitter has come up with is ads, which, let's be frank, on Twitter's platform are very easy to miss. We'll see what they come up with. Blockchain improvement platform Blockstream has closed a $21 million seed funding round with investments coming from companies including Google, Yahoo, and LinkedIn. The funds will be used to build upon what Blockstream calls its sidechain proposals, which would allow assets to be exchanged across multiple blockchains via a two-way pegging system to give developers new room for experimentation. The company is also hoping the funds can further the development of Bitcoin 2.0 applications, which allow users to engage in transactions that eliminate the need for middlemen such as trustees and escrow managers. As Blockstream CEO Austin Hill explains, there's a lot of education that needs to occur. There's a lot of communication, and we look forward to the coming months where we're going to be publishing more details, more technical details, sample code on GitHub, and allow people to start experimenting with various parts of the technology stack. Blockstream isn't the only one getting its freak on in funding. The company is also being joined by Bitcoin wallet platform Coinbase, which is seeking to raise an additional $50 million in funds to continue its global expansion as a Bitcoin legacy company. $50 million sounds like a lot of money, considering Coinbase's recent series of financing, which saw the company's total assets increase by an additional $25 million. What's even more surprising is Coinbase's original goal to raise $150 million. Apparently, the Bitcoin conglomerate's ambition was larger than we all thought. The company has faced headwind, however, due to regulatory overhang in the U.S., prompting those in charge to drop their funding goal by about $100 million. Of course, the fact that Coinbase is being monitored closely by various state and federal regulators may have also had something to do with the decrease. The organization has recently expanded into an additional 13 countries in Europe, and while each country presents its own regulatory and monetary rules, being widely available allows Coinbase to mitigate some of the risks associated with being dependent on a single demographic. But here's a tip. Aside from trying to raise money for itself, Coinbase has recently managed to launch a one-click Bitcoin tipping tool designed to accept micropayments anywhere on the web. Entitled Coinbase Tip, The feature allows users to send micropayments to web publishers with, simply enough, one click. Coinbase Tip will be added to a number of popular blogs, including Beacon Reader and Zapchain, in order to give the process an early start. As Coinbase CEO Brian Armstrong says, we believe there is a new micropayments economy, the beginning of which you're just seeing, and I think it's significant because this business model just wasn't really possible before Bitcoin. We don't look at what the competition does around these things. If we can help the Bitcoin ecosystem overall, that's probably where we most want to focus. The new feature comes at a time when Bitcoin tipping has become more popular than ever, but complications are still arising from the mix. Users of Coinbase Tip who employ third-party wallets will need to navigate through additional steps, so ultimately only those who use the Coinbase wallet will be subjected to the easy one-click design. Armstrong acknowledges that while this may turn some users away from the app, he's excited about doing his part to raise Bitcoin awareness, and let's face it, who doesn't like getting tips? Photo messaging application Snapchat has launched Snapcash, a new app which allows users to send instant cash to friends and family via text chat. The feature is available through Snapchat's recent deal with mobile payment platform Square Cash, which houses users' private account information. Snapchat enthusiasts are particularly happy about Snapchat not holding user account information, considering the application's recent security issues, which saw to the leaking of names, phone numbers, and other miscellaneous account information of almost 5 million Snapchat users. Despite the security lapse, Snapchat is valued at nearly $10 billion, and the platform has been trying to figure out a way to successfully monetize their app for maximum public use. Snapcash is available for all users over the age of 18 possessing a MasterCard or Visa debit card. Does the feature sound hip? Well, don't take our word for it. Here's a Snapchat's commercial detailing the new application.
So excited to tell you about. Swipe 3 fingers to make it rain. Paying people back will never be the same. Dollars put down to the bank account. No longer carry singles in large amounts. Swipe to send will make your day.
Last week saw the price of Bitcoin reach a high of about $458 before dropping again over the next few days to hover in the range of between $390 to a low of about $370, where it mostly stayed put. The weekend did see a brief peak when the price climbed back up to about $410, but the excitement was short-lived as the price quickly returned to the previously mentioned range. At press time, the price is about $375. The price resurgence follows reports of an increase in trading activity, with BTC China reporting an over 300% increase in its trading volume this week alone. The other interesting occurrence is that when the price peaked on Thursday, that was a few days removed from the FBI and Europol's joint operation to seize numerous darknet marketplaces codenamed Anonymous. And you thought Bitcoins were just for buying drugs on the internet. Now to take a look at the wild, wild west of Bitcoin and examine some continuing fallout from those who bit off more than they could chew with its fledgling digital currency. This is Got Gox. Going once, going twice, 50,000 additional Bitcoins seized from the Silk Road darknet operations are set to be auctioned off by the United States Marshal Service on December 4th, an early Christmas present for all digital currency enthusiasts, as the auction serves as an opportunity for all potential bidders to purchase the coins at cheaper prices. This is the second of 2 Silk Road Bitcoin auctions, the first taking place in June earlier this year following the arrest of the site's operator Ross Ulbricht. As security analyst Gil Luria states, the first Bitcoin Marshals auction was very good for Bitcoin, and this one should be as well. It provides potential investors a way to buy a large block of Bitcoin at one time without impacting the market price. One of the other benefits is the availability to investors that would rather deal with the U.S. government than a private seller or exchange. Bidders are required to pre-register for the event, and winners will be announced on December 5th. The bidding war appears to be starting already, as Barry Silbert, founder of digital currency group Second Market, announced via Twitter on Tuesday that he will be partnering up with Bitcoin investment group Bitcoin Trust to form a syndicate to bid during the Silk Road auction. Silbert is expected to face a heavy challenge from venture capitalist Tim Draper, who was the sole winner of approximately 30,000 Bitcoins in the first auction in June. His original win is expected to give him an edge in this fight, so seeing these two Bitcoin titans in the bidding ring will probably provide quite a show for digital currency fans. Kentucky-based software development company Lovewell Inc., makers of the sexiest Bitcoin wallet, the FIVA wallet, have launched an Indiegogo campaign to raise enough money to have an ad for the wallet play during the St. Petersburg Bitcoin Bowl on ESPN on December 26. If they're successful, this would make the ad the first nationally televised Bitcoin advertisement. As they explain in their pitch video,
"We are extremely passionate about this technology and want to share our vision with as many people as possible. The Bitcoin Bowl is a huge opportunity for our community as we're able to showcase this technology and the name Bitcoin to millions of Americans."
If they secure funding by December 1st, they will be able to ensure that the commercial airs 4 times during the broadcast, as well as any further repeats of the game. Since Indiegogo itself doesn't accept Bitcoin, they've provided a wallet address, and any Bitcoin donations will be converted into US dollars through BitPay and added to the campaign. The campaign page actually features the commercial they want to air, so let's give it a watch.
Bitcoin crashed last Sunday. It doesn't make any sense. Some computer programmer and code robot guy nobody's ever heard of. If it was money, we would call Bitcoin money. They don't call it money. You can't buy anything with Bitcoin, pizza, and drugs. And Silk Road shut down, so you can't buy drugs. When are you ever going to be able to buy anything with Bitcoin?
You want to help with these?
How did you...
Troll, please. The FIVA Bitcoin wallet, now plus gifts.
Find more information on this week's news stories at moneyandtech.com. I'm Stephen Chun, and thanks for watching Money and Tech's Weekly News Update.